Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for making time today.
Good afternoon.
Well, stocks on Wall Street strongly higher on Thursday. Tech shares leading the way. The Nasdaq up almost 2.7%. Comments from top Fed official Lael Brainard about maybe pausing the rate hikes this fall if inflation doesn't come down. What's the story in the global markets?
Yes, if you look at the Wall Street, it snapped a two-day decline on Thursday, with the Dow Jones finishing up more than 400 points higher, while the S&P 500 and tech-heavy Nasdaq outperformed by adding 1.8% and 2.7% respectively. Particularly the growth stocks were one of the better performers in the market, despite the sour outlook from the Microsoft and fears of the rising borrowing cost. If you look at the specific stocks, the Tesla, the Meta, and roughly the semiconductor index all rose quite sharply, around 5% plus. This is quite a good news that major tech stocks, including Amazon and Alphabet, also gaining about 3% plus. But on the flip side, the share of the Microsoft came under some pressure because the company is expected to release earnings that might miss the expectations, and the revenue targets might be a bit tougher on this quarter. All in all, however, though, with the payroll reports coming out, the labor demand is slowing down a bit, which might be causing the inflationary pressure to go down. That is resulting into continuous reasonable interest rate environment where the 10-year government bond rate has come down to around 2.9% from the peak of 3.1 to 3.2% previously. As the Fed Vice President Brainard said, the taming inflation might be tough, but nevertheless, Fed will be in charge and will continue to raise interest rate in order to control the inflationary pressure. But she thinks that is possible, that the inflation can be tamed in somewhat. Overall, we do think that the rate hike is expected at a speed of 0.5% rise in June and also another 0.5% in July. But going into the future, the rate hike will be slowing down to 0.25% per meeting for the time being. Maybe by the end of this year, the Fed rate might be reaching anywhere between 2.5 to 2.75%.
Right. Well, Korean stocks got a boost today from some of those same factors, it would seem. The KOSPI closing higher. The KOSDAQ almost flat. A solid gain for shares of Kakao, though, and foreign buying continues. Tell us about Korea's domestic equities.
Yes, as you said, the South Korean shares traded higher on Friday because of the U.S. market were quite strong on the previous day. And gains, but however, though, a bit cautious because of the U.S. job data and overall economic conditions and interest rate hike. If you look at the Korean won, though, it has appreciated quite a bit. It has appreciated to 1244 by around 6.51. Clearly, the U.S. dollar seems to be stabilizing as well. The dollar index is at around 101.5 or so. It has depreciated from the 105 peak. This kind of trend is definitely positive news for Korea, where the foreign investors are no longer the net seller of the market. If you look at the futures market, foreign investors total net bought of about 211 billion. And also for the equity market, they didn't really sell much on the KOSPI, but on the KOSDAQ, they sold about 161 billion or so. The retail investors are sellers of the market on both the futures market as well as the KOSPI, but they are actually buyer of the KOSDAQ. If you look at institutional investors, they continue to be a buyer of the market, where they totally bought about 322 billion won worth of KOSPI and slightly net buying the futures market. Going into the future, we would have to look into what happens to the inflationary pressure. The South Korea's Deputy Central Bank chief said that the range will be around 5% plus in June and July. That could be one of the highest level that we haven't seen in the past 14 years. But that number might be coming down after July gradually, as we've seen that kind of trend happening in U.S. as well. We need to look at more cautiously of what happens to inflation as well as what happens to domestic consumption numbers. If that is a control, then we think the KOSPI can be further strong, can show further stronger movement in upward trend. But right now still remains at below 2,700 territories. We think that over the next 6 to 12 months, KOSPI can break above 3,000. But we have to wait and see how Bank of Korea will be doing in terms of interest rate, and also what happens to the economic condition as well as the earnings number in the second quarter.
Well, back to the exchange rate, it continues to hold, as you said, about 12.40 to the dollar, having come down from 12.90. You mentioned the dollar index coming down below 102. What's driving the exchange rate in this direction? Where do you see it going?
Yes, as you said, Korean won has appreciated. It did go up to as high as 1290 territories a few weeks ago, has appreciated down to now about 1240 territories on Thursday. And today also continues to remain at quite positive territories. The currency is set to post the third weekly rise. In offshore trading, the won was quoted flat at about 1241 level to dollar, while the non-deliverable forward trade 1 month contract was quoted at around 1240.3 or so. If you look at the overall 3 years government bond rate, it remains at around 2.7%. I'm sorry, it has risen from 2.7 basis points to about 3.15%. While the benchmark of 10-year yield rose to 3.45%, rising by about 2.6 basis points. The overall interest rate environment is a rising trend, and therefore people might be expecting the Korean won to further appreciate gradually. If you look at the U.S., when U.S. market tends to, when they raise the first-time interest rate, over the next period of 5 to 10 weeks, the U.S. dollar tends to appreciate. After that, 5 to 10 weeks later, U.S. dollar tends to depreciate over the period of 1 year or so. Clearly, we have passed the 5 weeks territories already, as the first rate hike was the March 16th. It's almost 2 months now. We think that the appreciation trend has stopped. More like it we'll be seeing over the 1 year period of depreciating trend. If that happens, then usually the manufacturing strong countries such as Korea, Taiwan, and also China tends to appreciate in terms of the currency, and foreign industrial interest tends to rise as well. In terms of the export conditions, we think that the Korea, Taiwan, and China seems to have a very strong position in terms of the price competitiveness as well as the economic conditions and technology level. And therefore, if that happens, then there will be more room for the appreciation rather than depreciation of currency, as export numbers continue to be very strong. Overall, we think that Korean won can appreciate to below 1,200 level over the next 6 to 12 months. If that's the case, that will be positive news for Korean equity market gradually. It's not going to be a very significant movement upward quickly, but a gradual movement is expected over the next 6 to 12 months.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on and sharing your insights with us. We appreciate it.
Thank you very much.